Welcome. This is Dave White sitting in for Tom O'Brien. Tom is on a well-deserved vacation, and we'll be back shortly. Of course, I am the technology correspondent here at Tiger Financial News, and we'll be talking technology for the most of the hour. If you want to give me a call, you can at 877-927-6648, as long as it has something to do with technology, since we try to focus on that on Fridays. And if we want to look at the S&P, it closed up 2.89 points, so kind of a flat day. 2.64 billion shares on the New York consolidated tape. You would probably think that if you were looking for some decent volume, 3 billion, maybe 3.5 billion, 2.6, kind of a quiet day on a quiet Friday ahead of options expiration. But of course, what we're really looking forward now to is earnings. Earnings going to start in a big way. Of course, we started off today with, what is it? Let me get it up here. With Wells Fargo. Initially, the news kind of had this stock popping up a little bit. But as you dug farther into the earnings, what you found out is that the new loans are not really keeping pace. And why it closed up higher than the close, it was down, and I wouldn't say significantly, but probably the thing that most people are looking at is the Wells Fargo has been the go-to stock in the financials. 12 quarters in a row, they've blown away estimates. That they really just came in line here. Probably signals some weakness, especially when we start looking at next week, especially in the S&P stocks that are in that. Now, I'm going to go through the earnings calendar here just quickly, but we've got Citigroup on Monday with Cintas. Citigroup, of course, financial. Cintas does industrial clothing, uniforms, that kind of stuff. Tuesday, we're going to get a good read on how the trains are doing. CSX, Intel, of course, after the bell. JP Morgan, I think, is before the bell that day. J&J before the bell, and Yahoo after. Of course, we're really going to be looking forward to what Yahoo says they're going to be doing with their money from the Alibaba IPO. So we probably could have some movement on that, less directed on their earnings and more directed on the IPO spinoff. Wednesday, we've got Bank of America, we've got eBay, SanDisk, and Yum Brands. Thursday, Capital One, Google, and United Health. Friday morning, we get General Electric, Honeywell, and Kansas City Southern. So a full week, and it's probably going to go about 3 weeks of fairly rapid stocks, but we should be through about 15% of them by the next Friday, and a pretty representative group of stocks. So going to be a volatile week during expiration. So everybody keep an eye on that. As always, if you are in the Tiger's Den, you can post me a message. Maybe I'll get a chance to actually talk about your particular stock. And, of course, give me a call. But, hey, I digress. As we go into the Alibaba IPO, what we do know is that their dates are now becoming apparent. It looks to like pretty much all the rumors are coming in around the end of the month for the roadshow. For people that are not real invested in IPOs, you do a red herring. Alibaba's already done that. This is the document that kind of is the prototype. That goes to the SEC. It comes back. They go out and do a roadshow, talk to a lot of the investors, tell everybody how great things are going to be. Then about a week, 10 days later, the IPO rolls out, and you see everybody ringing bells on the floor of the New York Stock Exchange or the NASDAQ. But that is probably going to happen the 7th or 8th of August. There are basically everybody on Wall Street is going to get their beak wet on this deal. So we're kind of watching it, because if there's going to be a time that everybody upgrades everything, it's going to probably be the week of this Alibaba IPO. They want this thing to go out smoothly, and of course it's a going to be a monster infusion of cash to everybody that is running the stock. And I think there's 20 or 25 different establishments that are going to be involved in this. And, of course, you know, everybody gets their beak wet. Everybody wants this to go smoothly. No one's going to talk about it badly or even realistically. So I'm assuming this thing's going to probably come out at a fairly decent price. They are, at least in the current prospectus, going to get $30 billion day one. That would evaluate the company with the rest of the shares that are not out in the market that are going to be withheld at somewhere around $150 or $160 billion. And of course, for people that are new to the show, Alibaba is kind of a eBay, Amazon monolith for China. They do a great deal of business, but it looks to me like they should have gotten this IPO out probably around Christmas. The numbers are starting to weaken a bit. That has gone into the Yahoo price. So when we look at that, it is one of these stocks that's kind of a barometer for the rest of the market. Can they get $30 billion? I think they can for the stock, because the story is, of course, this is going to be eBay, Google, and everything. They have basically about 6 or 7 different businesses. We've gone over it on the show before. But this is probably the most important IPO of the year, and the one that's going to drag in the most amount of fees for Wall Street. So they're going to try to make sure that it gets out at a decent price, and they can also make some decent cash on the deal. So we'll keep an eye on that. Other things in technology. Google is a company that I think is probably the best run right now of the technology companies. The stock hasn't been doing a great deal. But we talk a little bit less about technical issues and more about fundamental issues here on Friday for technical stocks. And if you listen to the show for a while, we talked about over a year ago where Apple was going to get into doing maps. And Google has somewhere around 6,000, maybe as many as 7,000 people that work on their map and map program. It's a huge moneymaker for Google. Now, a lot of people might try to thin that down now that they've got a lot of things mapped. Google's pressing forward. They've added yet more tools to their Google Maps. And as of Wednesday, if you click anywhere on a map, you can instantly drop another click somewhere on the map, and it'll tell you exactly how many miles it is between those 2 points. So if you've always wanted to do something like that, pretty interesting. Of course, a year later, Apple's maps not really significantly different than about a year ago. They've cleaned up some of the problems, but they're certainly not putting the kind of 6,000 or 7,000 people at this that they want. In fact, probably the biggest competitor to Google Maps is going to be Bing Maps. I've seen them around my neighborhoods and around Tampa, driving around with their Google-like map cars, but with Bing, of course, written on the side of them. And it is kind of interesting, but to me, Google has the most defendable position. In any kind of downturn, Google would probably be the one I'd be long if you were going to short another one. If you thought some other stock was going to go down, we'll say like Amazon, I would think you'd probably want to be and do a pairs trade. You'd probably want to be long Google. It has the most transparent way it makes money. It sells ads, and they continue to push their advantage. I really like seeing this constant and never-ending improvement in their map sector. It is a huge moneymaker for them, and it continues on. But very nice that you can just click anywhere now and get directions, distance, or a clear measurement. So very neat. Okay. Also, what we've been talking about a great deal is the Internet. Of course, most all these stocks, whether they're cloud stocks or whether they're Netflix, have a problem when it comes to eventually seeing maybe taxes on their services. We'll be talking about this when we come back, but there's a bill making its way through, and it has a huge amount of sponsors, but we may be tax-free in the Internet forever. We'll be back in a minute.